Welcome back to Market Minutes, everybody. Today I'm going to be interviewing Cory Capland, president of Peakhill Opportunity REIT. Thanks for being here, Cory.
Thanks for hosting, Chaim.
We're about 75 days into the launch of PREIT. You joined Peakhill, a few months before that. What did you see in the market which was compelling enough for you to start the REIT at this time?
Yeah, it's been a lot of fun so far, Chaim. We're really excited about the market, specifically the GTA, for the next couple of years on the apartment and multifamily income side of things. The market has really changed over the last couple of years. There's been this vacuum of liquidity. Many folks that were incredibly active in the market, when interest rates were incredibly low, are now sort of in a retrenchment phase and are maybe taking a step back. And we see the opportunity for PREIT to come in as a new player in the GTA apartment space and begin to buy assets at really good cap rates. And overall, we view the interest rate environment as quite attractive for us to be able to execute on that opportunity. I think what we're seeing are really exciting, contrarian-oriented opportunities, given what is happening in the private REIT space, given what's happening in the real estate private equity space. And right now, Toronto, and sort of the notion of buying Toronto and assets in Toronto, it is a bit of a contrarian play today, and I'm really excited to unpack that with you today.
Great. So let's dive into the GTA, the Greater Toronto Area, where the REIT plans on focusing its acquisition strategy. Last season, I interviewed one of our VPs of finance, Max Goisman, and he noted that where he's seeing the capital markets flows is actually into tertiary markets. He noted that the Atlantic provinces and the prairies, we're seeing a lot more transaction volume there. And so somewhat of a pendulum swing away from, what would be, typically the more populous places within the country. Agree, disagree with Max, but tell us what you're seeing from your perspective.
I agree. There's quite a bit more development activity and business activity outside of, MTV, Montreal, Toronto, Vancouver, those kind of major markets. And so as we look at why Toronto, really there's been this vacuum of liquidity in the market. If we look at Canada at large, there are currently, last I saw, 10 private equity strategies that are currently gated, which amount to about $29 billion of assets. Most of those mandates that are currently frozen, if you will, are focused on assets that are domiciled here in the GTA. And so when you look at the opportunity to deal and work alongside of, motivated parties, sellers that can benefit from some liquidity, and on the other side of the token, look at a market where there isn't that deep of a bidder pool for these assets, Toronto really is that market that sort of is trying to find its footing. And as we look at, areas in the prairies and in Eastern Canada, housing to build is cheap. The economics for new development are actually quite vibrant. And so there has been more activity in those markets relative to Toronto. Toronto is really, we're sort of getting out of this pocket in the market where the market has been quite bruised up. And actually, that's where we see a really exciting and interesting entry point for PREIT to come and buy assets when others are not. As we look at the outlook for new supply in the GTA from 2028 onwards, really the new supply is falling off of a cliff because of some of the softness in the GTA specifically. And so we think long-term that bodes very well, because new supply and the reduction of that new supply over time is going to really help us and put wind in our sails in terms of rent growth within our apartment portfolios.
As somebody who grew up in the United States and speaks to investors on both sides of the border, when people look at Canada, Toronto obviously is, for better, not to offend anybody, our flagship city. You've got our baseball team, our basketball team. People know, globally, people know where Toronto is on the map. Would you say, when you look at this entry point, is this a generational buying opportunity?
Yeah, I would say we have a really, really vibrant backdrop for assembling a portfolio from the ground up. Interest rates are in the mid-threes today. Leveraging our platform here at Peakhill, being able to access great CMHC financing, that's a key sort of value add of our strategy and our capability as a sponsor. So interest rates are in a great position right now. As you know, with Peakhill Capital and our capabilities as a top 2 CMHC lender in the country, we've got great informational insights. We have great access to pricing in the debt market, and being able to tap acquisition financing through CMHC in the mid 3% range, the music's playing, right? We have this really interesting backdrop where interest rates are in a really friendly spot from a transactional perspective, and cap rates have moved higher because of the reasons we talked about. So when you talk about cap rates in a strike zone and interest rates in a strike zone, overall, it's a great mosaic for getting deals done and assembling a thoughtful and attractive portfolio of apartment assets here in the GTA. And that's what really makes me very excited about our prospects at PREIT.
Previously, you mentioned some of the challenges that we're seeing in the condo market and with building purpose-built rentals. Without getting overly political, we do know that the Liberal government, the federal government, has a mandate to create more affordable housing with the Build Canada Homes policy. To what extent will this policy, if at all, impact, and to what extent is this policy even coming to fruition?
Sure, absolutely. And so you're referring to Build Canada Homes, which is sort of the landmark strategy that the federal government sort of announced in the fall of last year. $13 billion of investment to cultivate and sort of re-energize the new housing sector in Canada. So far, it has been, I'd say, more press releases than action, if you will. I think the government's hearts and minds are certainly in a good place with respect to how do they unlock the government-owned lands and partner with developers to create housing. But really the nature of it in Canada is development is hard, construction is hard. To build, say, a 200 or 300 unit rental building in Toronto or Montreal or Vancouver or other markets, typically the life cycle of that development is longer than an election cycle. So it's very hard to catalyze new development from a government perspective. I think there are some silver bullets that the government has yet to sort of pull on with respect to tax abatements, reducing development charges, things of that nature. But really, it's going to be something to monitor as the months and years play out as far as how does Build Canada Homes actually translate into meaningful new housing creation.
Taking a step away from the political, but maybe looking at more outside of the GTA, Canada, real estate as a whole, what are you seeing trending this year? Where do you, obviously we have, the proclivity, having the, you mentioned data insight into a lot of the deal flow on the multifamily side, but we also mentioned capital flows, kind of the pendulum swinging. What else are you seeing? Or, when you think about Canadian commercial real estate, what are you keeping your eyes on?
Yeah, for sure. Before I make a comment there, the one thing just before we close the loop on the political side, I think one initiative that the government should look at, which is very, very easy in terms of securing the affordable supply of new housing, is looking at what is going on in the condo market today. So we have this glut of housing on the condo side specifically. And some of it is not so good housing. We hear the term dog crate condos, very small and unlivable, but there's a perfectly good supply of new inventory condos that are highly desirable. And when you think about all these government programs that look at how do we create and secure housing for people that need affordable and, working class housing, I think one really interesting tool is for the government to go out and buy condo units. Why not talk to the developers? The developers are looking for liquidity. There's a ton of buildings that have pre-built units that they can simply deploy, say that $13 billion, into buying condo units really across Canada and locking in the affordability rates forever, for really as long as the federal government wants to dictate. There's no entitlement development timelines. There's no construction risk. The government doesn't have to put up guarantees or partner with the private sector. They can simply and actionably buy units in that space. I think that could be very interesting.
I actually love that idea. I think the greatest risk is the people who bought units in those buildings weren't necessarily signing up to be in buildings that had, call it, government housing or affordable housing. And, that may cause a little bit of a tumult, so to speak. But I think it's a fascinating idea. And I hope somebody at the government is thinking stronger about that, because you're right. The housing exists, and to have, affordable housing options, to look for something to reinvent the wheels seems silly.
So long as we get credit at the end of the day, just a little bit of credit, you and I, for that idea.
You can keep it.
So you heard it first. To answer your question on, the data, what we're seeing on the ground in the market today, one of the things we're really watching is this impending renewal cliff. And what I mean by that is, between 2020 and 2022, folks that are buying apartment buildings and other commercial real estate assets were locking in 5-year financing at the, absolute bottom of the market in terms of rates, 1% rates, 2% rates. And again, with 5-year term, that eventually rolls. And so when you think about the billions and billions of dollars of transactional activity between 2020 and 22, that renewal cliff is hitting right now. Between 2025 and 2028, there are billions and billions of dollars of loans that are rolling over at interest rates that are going to be double those basement bottom low rates. And so we're having discussions with a lot of owners that are kind of looking at their renewal book from a mortgage perspective and seeing, how they deal with that. And as you know, PREIT is a really great counterparty to help groups access liquidity, sell assets or a portion of their assets. And so looking at the renewal cliff is a really big theme. The other real area of focus that we're looking for in the GTA specifically is really trying to find a floor on rental rates. And so because of this big glut in condo unit supply, there is a bit of softness in the rental market. And I think that's sort of observed widely across the GTA. And I think what a lot of owners, including ourselves, are looking for is to see really when the market can begin to find its footing. And once rents sort of hit the floor and move back higher, I think there's going to be a lot more momentum coming into the market and a lot more transactional activity as well.
Very insightful. I appreciate the 2 cents. If I have your attention for a few more minutes, we're starting a new segment in Market Minutes. This is called Market Minute. We're going to do some rapid fire questions. There's 60 seconds on the clock. We'll see how many we can get through.
I'm incredibly nervous.
Let's go. Favorite restaurants in Toronto?
Oof. I would say we had dinner this past weekend at a place called Lunch Lady at Ossington and Dundas. Really great Vietnamese place, good atmosphere. My wife and I had an amazing dinner at the bar there. Fantastic.
I'm not going to have time for more questions yet. These are short answers.
I missed the memo. I'll get you next time.
Okay. Interest rates headed up or down?
I think stable. We're gonna find this range. My view is we undulate in the next, undulate in the 25 basis point range.
What app do you use most on your phone?
Claude.
What book is on your nightstand at the moment?
The Caesars leveraged buyout catastrophe book. Forget the title.
Cilantro, yes or no?
Yes.
What is one thing on your bucket list? This is it. Time's out. Okay, cliffhanger, everybody. We'll have to get Cory back another time to find out what's on his bucket list. Appreciate having you there.
Thanks for having me.